Hello everyone, welcome to episode 3 of the series. We're going to be talking about aligning yourself with order flow and finding the draw on liquidity. There's a checklist that I go through to find the draw on liquidity, and this is a repeatable checklist, so you could always follow this with this model. You need to have the knowledge of episode 2, so if you don't know what a change in the state of delivery is, we talked about that in the previous episode. That is what CISD is, so make sure you watch that before watching this episode. I made this series in chronological order, so it goes from beginner to advance. So from 1 to 7, that's how it should be watched. If you are more experienced, you could skip through a little bit, but I just recommend watching it from start to finish. So I like to see, where is price delivering from? Which level of liquidity? Did it take out buy side liquidity and expand lower, or did it take out sell side liquidity and expand higher? If it took out buy side liquidity and expanded lower, where did a change in the state of delivery occur? Or where did a bearish order block form? Or the opposite. If it took out sell side liquidity and expanded higher, did a bullish change in the state of delivery occur? Okay, I like to see, if that occurred, where is price at right now, and which PDRAs have been respected so far and which are being respected. If I can answer these questions, usually I could figure out where price is delivering to. If it's not clear, no, you just don't take a trade. So the goal isn't to find every single day bias using this. Sure, it's possible, but there's going to be times where you're uncertain, and in that uncertainty, you just do nothing. You just wait for a high probability scenario to present itself again, because there's always going to be future setup. So I'm going to go onto a chart, and you're going to see me answer these questions. On the S&P 500, if we start off on the hourly chart, you can see that we had this huge drop lower. When price delivered from this high to this low, right, it took out sell side liquidity, then it expanded higher. When we get this sharp drop lower, lots of retail traders are going to be thinking that this retracement back up is going to be a bear flag or a rising wedge. And the reason that is because it moved away from this high with speed and velocity. So this just looks like a retracement. So everyone and their mother is going to think that price is just going to continue lower. If you were in the Discord in late December, you know that we were targeting this high up here. That being said, when price pulls all the way back down and takes out this sell side liquidity, I believe I already covered this a few times, so I won't cover this example, but price delivered from the low and then expanded up to the high. So I'll start the analysis up here. When price took out this level of buy side liquidity, what I'm looking to see is, do we get a change in the state of delivery? If we do get a change in the state of delivery and start to expand lower, then I could potentially look for a sell setup. When price is above buy side liquidity, there's two different things that I really look for. I look to see, does price expand higher or does it expand lower? And once it does either of those, then I could start to come up with a bias again. So really what I'm looking for is, does price expand higher or lower? And once I see that, then I can start to frame a bias. When we're above this level of buy side liquidity, I don't want to have a strong bias in here. So if I go down to a 15-minute, let me remove these real quick. I'm looking to see, actually we'll go to 30-minute. Do we get a change in the state of delivery? So remember, I like to see a change in the state of delivery occur from the left side. I don't really count this initial market structure shift as a change in the state of delivery. It did not disrupt any order flow. We talked about that in the last episode, so make sure you check that out. We get a change in the state of delivery here. Okay, since price is above this level of buy side liquidity, what can happen is the first model above buy side right here, since it's been bullish, it might fail. So I want to get feedback that price is in a sell program. How do I get feedback that price is in a sell program? Once it creates this change in the state of delivery, price trades lower. When it trades back higher into the order block, does it expand lower, creating another change in the state of delivery? So this is a confirmation setup. This last up close candle in here becomes the propulsion block because it retested the order block. It's still an order block, it's just classified as a propulsion block. Creates another fair value gap in here and then starts to trade lower. So you've heard me say before, most likely, because I've said it a few times, you may not though, I like to wait for the low risk sell of a market maker sell model to be in before trying to pick a top in here, since it's been bullish. So once price retraces back up into the order block, this can become a low risk sell. I'm not trying to predict that, right? I want to see, does price expand lower from that order block, which we do get here, and then it sets another low and it creates fair value gaps in this price leg. Once we get that and that propulsion block is in, I like to call that the model 2. This puts in the low risk sell of a market maker sell model, then I start to look for it to attack the sell side liquidity. So when price is at a new high, that's kind of like a smart thing to do. Instead of just trying to predict the first change in the state of delivery to work, you're kind of just waiting for a second one to form inside the order block and start to see price trade lower. So once we're down in here, okay, once it's at that new low, now I believe that price can potentially trade into here, but let's look at the checklist real quick. Where is price delivering from? Which liquidity? We'll see this line. This is buy side. So we have the buy stops right here. And then we also have the buy stops right above this high. So it's taken out buy side. And then what occurred after that? It expanded lower and it created a change in the state of delivery. So it took out the buy side, expanded lower, created a change in the state of delivery here, repriced back into the order block. Remember, the entire up close candle range is the bearish order block. This is just the sensitive point, the open of that. Retraces all the way back up into the most sensitive point, which will be right up in here because that's really the inception of the move lower. This was a high resistance liquidity run here. It was just trading back and forth and back and forth. It repriced back to that and then expanded lower. Okay, so it took out buy side. It was delivering from the buy side liquidity, expanded lower, creating a bearish change in the state of delivery. Where is price at right now? Well, if we're watching price in here, it is just consolidating after retesting the order block as resistance and then trading lower. Okay, and then we have the engineered sell side liquidity below. So we have all of these lows in place over here. So I like to wait for that confirmation of a low risk sell being in to not try and pick a top in here. Okay, so far it's delivering from the buy side liquidity. It created a bearish change in the state of delivery. Price was consolidating right above the relative equal lows. Bearish PD arrays are being respected. How are bearish PD arrays being respected? Well, notice how it's returning back to fair value gaps. It's expanding away from them. Okay, this entire retracement back up, all it did was reprice back to the order block in here. So we have this last up close candle. Okay, on the higher time frame, this is kind of the order block in here. You could also say that it repriced back into here, and this is the order block. It's a little bit subjective there, really traded to the high of that. Either way, it retraced back up into a bearish PD array in here and then expanded lower, retraced into a bearish fair value gap. Also, the bearish propulsion block or order block, same exact thing. It's just that it's an order block that retested an order block and expanded away from that. So when price retraces back up here, okay, bearish PD arrays have been respected. So I'm anticipating for these bearish PD arrays to potentially be respected in here. Okay, so it's followed the criteria so far. It's delivering from the buy stops. It created a bearish change in the state of delivery. Okay, bearish PD arrays are being respected. And then we have all of these relative equal lows below. So in my opinion, that's going to be the next likely draw to the downside. So when price retraces up in here, what I could do is hunt for lower time frame setups. Now, we're going to talk about kind of doing a top-down analysis with this a little bit later in the series. This is just kind of forming that higher time frame bias. So now I'm anticipating for the sell side liquidity to get hit. And what happens? This is at 9:30, retraces back up into the order block, and it reprices to the fair value gap high. Once it does that and then starts to expand lower, okay, I really don't want to see price move much higher than that fair value gap high. Once it already, if we zoom in on a 5-minute, real quick, once it already traded to that fair value gap high and expanded away from it, this is a lower time frame 1-minute setup in here. So we'll talk about that for a second. If we zoom in, if I can find where I just was. Okay, this is when we have that bias that price is going to head lower. So what we can do in here is we can look for a lower time frame change in the state of delivery. Okay, so now we have the bias that price is going to head lower. Now we get this change in the state of delivery. Well, this is a high probability setup. So you could trade that and either target the sell side here or the sell side lower. Again, we will talk about using the model fractal across all time frames in later lessons. Here we're just establishing you don't have to use a daily time frame to get a higher time frame bias. I'm using, I believe it was the 30-minute. Yeah, it was the 30-minute time frame in here for my higher time frame bias. You could use a 15-minute and use the 1 minute as your entry model time frame. The thing that people mix up is they're using the higher time frame, such as an hourly and a 4-hour, and they're just marking out PD arrays and thinking that that's their higher time frame bias. And I know a lot of you are saying to yourself right now, that how do you know that? That's exactly what I do. And that's because that's exactly what I did. And it's going to be extremely hard to pick the right setups if you're doing that. If you're just marking out PD arrays are useless unless you know where price is headed. I know a lot of people don't like to hear that, but that's the truth. Okay, so I can go in here and mark out any PD array I want, but if I don't know which side is being targeted, sell side liquidity or buy side liquidity, it's a 50-50 shot of working out. So you may look at this and say, okay, well, how do you know what it's going to do next once it takes out the sell side liquidity? Is it going to reverse? Is it going to keep expanding, right? How do I know what the order flow is going to be? And that's why we're going to be talking about aligning yourself with order flow. Is price expanding over highs and lows? Are down close or up close candles being respected? And which PD arrays are being respected? Okay, so are bullish breakers, fair value gaps, order blocks being respected, or bearish PD arrays? These things help me gauge institutional order flow. Before we get into that, a big misconception that a lot of you will have, and a big mistake that a lot of you can make is, because I did the same exact thing, that's how I know a lot of you guys are doing this. You're looking for reversals all the time, and you're always looking for changes in the stayed delivery. So you could see a bullish change in the stayed delivery and target buy side. As soon as that buy side liquidity gets ran, you're immediately looking in the opposite direction. You're looking for a bearish change in the stayed delivery to target sell side. You end up falling into this endless loop of predicting consolidation, because that's exactly what you're doing. If you're anticipating for a reversal at every level of liquidity, right, you're anticipating for consolidation, because price will be moving from buy stops to sell stops, and then sell stops to buy stops, and there's a time and a place for that. But when price is in expansion, you're absolutely going to get eaten up. So I'll go over how to align yourself with order flow. We're going to be talking about this example right here, and this is on the NASDAQ chart. If we look at a 4-hour time frame, price took out the lower sell side liquidity. Okay, this was NFP, takes it out, it expands higher, sets these relative equal highs in here, and then expands lower. Okay, what I want to see on the lower time frame when it expands lower is the algorithm constantly giving me feedback that it wants to trade higher since we got all this expansion, or does it show me that it wants to take out this previous low down here? So once it returns to this bullish order block or this down close candle in here, right, price just hit a little retrace back up, traded back lower, and it targeted the sell side liquidity, and it tapped into that order block, and then it started to expand away from that. So immediately, once I get this feedback that price starts expanding higher from the sell side and from the order block, I want to see, is it going to expand over this high? So this high is of importance right here. So price starts to expand over that with speed. If I look on a 15-minute time frame, what is it also doing? It's expanding over this high and respecting this bullish fair value gap. Trades up higher again. If we look at a 10-minute, it returns back to this down close candle, and then it starts to expand higher. So some people look at this and they're just completely waiting for it to take out this buy side to go short. But what has the algorithm been doing from this point to this point? Well, it's proving to us that order flow is bullish because it returned back to a bullish order block, respected that, took out sell stops, expanded away from that. And since it expanded away from those sell stops, it's just constantly giving feedback that order flow is bullish, right? It's respecting bullish PD arrays. Down close candles are acting as support, right? Price is returning to these down close candles right here, supporting that. Price trades higher, returns back to the down close candle here, trades higher, returns back to the down close candle, trades higher. Okay, so then it just starts to run immediately for the buy side. So when I see price run for the buy side here, look at all the buy side that we have above. So once it's doing this and it's delivering from the sell side, there's a good chance that price can start to target all of this liquidity higher. And the reason it would do that is because we potentially have a bigger market maker buy model in play. So once you see all of this engineered liquidity, it's a good sign that price is likely to take it out, since price already tapped into the key 4-hour sell side liquidity. So when price breaks above this high, how do I know if it's going to keep on moving higher? Okay, so I'm going to study what price does above the high. I'm not looking for the immediate reversal change in the stayed delivery above this level of buy side. Why? Because it's expanded all the way from the sell side down here and has been proving that order flow is bullish. Why would I want to pick a top in here when there's still all of this liquidity above? So since there's all that liquidity above, right, what I want to see is, do I get feedback of consolidation followed by expansion higher? So here, there's not really that much opportunity, right? But once I get this expansion higher, then it indicates that this liquidity will get hit. And you would really have to be trading a seconds time frame to get in on some of these moves in here. If you're just looking for the change in the steady delivery model, you don't really get that in here. You just get more consolidation and price starts to expand higher. And this is going to happen sometimes. In here, we do get a setup later in the afternoon because price takes out buy side. And what is it doing? It's expanding over the buy side. So what is that telling us? It's telling us that order flow is still likely bullish because it's expanding over highs and down close candles are continuing to be respected. Price broke above this high, returned back, took out sell side liquidity, and then it expanded higher. So once I see this, okay, this is a sign to me price took out buy side. Once it takes out that buy side, I want to see a run on sell side, and then I want to see it expand higher. It did that. So in here, I could take a long, and I could target the next buy side above, which is up here. Okay, so there are ways to enter in when price is in expansion. You're just looking for a change in the steady delivery when price is already higher up. But as soon as price takes out the buy side, you're not immediately looking for the first change in the steady delivery. You're waiting for price to return to a level of sell stops in the range that took out the buy side. Once you can get that run on sell stops, then you hunt for the model. And if you get the model in here and price creates a bullish change in the steady delivery, right, then it can indicate that price is likely to expand higher and continue in that direction higher. So you're immediately, as soon as it takes out the buy side, you don't immediately know if it's going to head for the next buy side liquidity. But by waiting for this feedback to see, does price consolidate and then continue to expand, or do we get a retracement into sell side liquidity, then create a bullish change in the steady delivery, that indicates that you're likely to see more expansion. So you don't just have to see this at reversal points. You could still trade this model when price is expanding higher. But it's important not to take that first change in the steady delivery right above buy side, because that is a lower probability of playing out. So the key thing I'm getting at here is look for feedback from the algorithm. Is down close or up close candles being respected? Is price expanding over old highs or old lows? Which PD arrays are being respected? And here, price was expanding above these old highs. Price was just going beneath old lows for smart money to buy sell stops before expanding higher. Well, how do I know that? Because price took out sell side liquidity and it has expanded away from that, creating a change in the steady delivery. And it's continuing to respect those changes in the steady delivery, right? Order flow is bullish and it's just continuing to expand over old highs. Once it's above this high, it's going to consolidate. And then once it expands higher, that's our signal that price is likely to head for buy side liquidity even higher. We're not trying to pick a top in a buy program. Rather, we're using this criteria to align with order flow and be on side with smart money. So this is going to be the last part of the video. I typically look at 3 functions of a fair value gap. I look for a fair value gap in the change in the steady delivery leg. So when price creates a change in the steady delivery, I look for a fair value gap there. That's kind of like the first way I look for fair value gaps. Then if it's delivering to buy side and I'm anticipating for price to target buy stops, then the second function is, as it's delivering to the buy side liquidity or to the old highs in here, what I'm going to do is I'm going to look for fair value gaps along the way to support price. So if I look at a 5-minute time frame, okay, I can look in here and see that, well, fair value gaps are acting as support. And if you look at a 1 minute, there's tons of examples in here where it's just respecting those bullish fair value gaps. You have another bullish fair value gap right here. Okay, on a lower time frame, there's going to be one in here. If I were to look at a 1 minute, I'll just show for example purposes. You could see that price is respecting these bullish fair value gaps along the way as price is targeting the buy side liquidity. So I look for it in the change in the steady delivery price leg, and then once it's already targeting the buy side, you could also look for fair value gaps to act as support along the way. I'll be talking about the third function later in the series, but that's going to wrap it up for this video. Hopefully this was insightful, and I will see you guys in episode 4 tomorrow.